Last year was one to celebrate for the biggest US banks. Their retail businesses boomed, rising interest rates let them earn more on every loan they gave out, and tax cuts helped them keep more of each dollar they earned.
People are looking at the financial service stocks and the financial service industry, which is really strong right now. And we're seeing that from the tax law. The money's coming back to these financial service companies, and earnings are skyrocketing.
That's an understatement. Cumulative profits for JP Morgan, Citigroup, Bank of America, Wells Fargo, Morgan Stanley, and Goldman Sachs reached $120 billion last year, the highest tally ever. But 2018 was also mired in controversy, with several banks under investigation for a variety of indiscretions, including profiting through predatory loans and money laundering. In March, Bank of America admitted it had defrauded clients by using their money for stock trades. Midway through the year, it was paying the highest fines on Wall Street for those tactics. By June, Citigroup had taken that mantle. It paid $100 million to 42 US states for manipulating interest rates. Malaysia's government says Goldman Sachs facilitated the plunder of its sovereign wealth fund 1MDB. Earlier this week, the bank apologized for its role, but authorities say that's not enough.
No, Goldman Sachs should understand the agony and the trauma suffered by the Malaysian people as a result of the 1MDB scandal. An apology is just not sufficient, not enough. And only when you pay reparations and compensations, will that be sufficient.
Back in the US, Wells Fargo is in the crosshairs for fleecing students. An inquiry by the Consumer Financial Protection Bureau found its branches on university campuses charge significantly higher fees and interest rates. That's often after bringing on clients through misleading marketing campaigns. Lawmakers like Democratic Senator Elizabeth Warren want Wells Fargo to get off campuses.
Wells Fargo has a history of aggressively and sometimes illegally squeezing its customers to boost its profits, and this report illustrates that the bank is developing similar tactics on America's college campuses to target vulnerable students.
Hundreds of billions of dollars in profits have let the big banks pay their way through controversies and crimes. But these profits may begin to dwindle as economic growth slows.
Forecasters had long predicted some moderation of growth in 2019. The additional tightening of financial conditions we've seen over the past couple months, along with signs of somewhat weaker growth abroad, have also led us to mark down growth and inflation projections.
And the tightening noose in cases like 1MDB could push the banks to clean up their acts or face even bigger fines. Mobin Nasir, TRT World.
For more on this now, equity strategist Matt Maley joins us now from Newton, Massachusetts. He's the managing director at Miller Tabak Asset Management. Welcome back to the program, Matt. So, a record earnings season for Wall Street's biggest banks. What would you say helped them the most in order to achieve this bumper result for 2018?
Well, it seems to be, two things, then they kind of fed on each other. But one is lending. I mean, that seemed to be where they really picked up things because, we see the consumer, the consumer confidence remains quite high, even after this most recent sell-off in the stock market. And of course, business confidence, especially at the beginning of the year, beginning of last year, I should say, was good because of the tax breaks. And that seemed to be the main reason. I mean, we still have some of these issues with trading volumes and some losses in the trading issue. Those are always volatile, so it's something that the banks always have to play with. But, I think the best thing, of course, that we saw was the reaction of the stock market. We've heard about your piece. We're talking about how all these different issues that they've been having to face in the recent in the last year has helped those stocks down, even though they're very cheap. And this time last year, everybody was bullish on the banks because they really thought the interest rates were going to move higher. I remained quite negative on the group because of the flattening yield curve and some of these issues you guys just talked about. And now that these seem to be more priced in, because last July, we saw real good earnings come out, and yet the stocks went down. This time, we're seeing good earnings. The stocks are going up. And even with some of the companies that have reported a little slightly disappointing earnings, those stocks have been able to rise. And that kind of tells us that maybe the worst news is already priced into the group.
Interesting. So do you expect those favourable conditions to continue in 2019, or are we at the end of a cycle here?
Well, that's the big question. I mean, we've seen this big rally in the group, and on a short-term basis, the group's rallied so strongly over just 3 or 4 weeks that we expect it to pull back. That would just be a normal trading issue rather than a fundamental issue. However, the question is, for instance, with Goldman Sachs, how big is this going to be? I mean, to say that a big fine is already priced in, I think that's still a stretch. And again, there's uncertainty there. It's going to be a while before we know. The other thing is still the yield curve. The yield curve has steepened a little bit, but not all that much. I mean, a lot of people are talking about how the long-term interest rates have moved up a little bit, and they have. And we've certainly seen credit spreads tighten back up again, and that's positive. But as long as the yield curve remains again, it's not inverted yet, but it's still quite flat. And if that really, until that can really bounce back, I think it's going to be hard for the bank stocks to really take off. But I do think they could finally perform at least in line with the market rather than underperforming it like it has over the last 12 months.
Interesting. And just quickly, Matt, what about those sort of non-market political headwinds? We heard there the potential for a multi-billion-dollar fine against Goldman Sachs over the 1MDB scandal. Elizabeth Warren is piling on the pressure against Wells Fargo, an emboldened Democratic Congress who don't really like the banks, let's face it. Are they going to hit the bottom lines of the Wall Street giants?
Well, I mean, you make a very, very good point, because on a political aspect, Elizabeth Warren, she's highly influential in the Congress, and even though the Senate is in a minority, she has a very strong voice, yes. And also she's running for president. So she's going to push this really hard. This is not something where she's just going to push it for a couple of weeks and let it die down. She's going to be pushing this hard for the next year. So that's going to create some problems and some more headwinds. So we still need to be a little bit cautious.
Okay, Matt Maley, thank you again for joining us on Money Talks.